We've got good news in housing and more bad news in retail. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. The good news is housing starts are up a solid 5.9%, while the market is ending the week with a whimper. Joining me now in the studio are Ron Gross and Charly Travers. Gentlemen, our top story. Nordstrom is down after reporting quarterly numbers. Even though same-store sales rose 4.4%, it was lower than some analysts had hoped. Nordstrom joins Wal-Mart, Macy's, and Kohl's in reporting some pretty sad numbers this quarter. Charly, the pain is spread across the sector here. We've got Nordstrom is luxury, Wal-Mart is not. I mean, really, everyone's hurting.
That is true, Alison, and I was hoping that Nordstrom would be a little bit more resilient than some of the other companies you mentioned because they do cater to a higher-end customer, the kind of person looking for $100 shirts, $200 shoes, and so on. You might think they're going to spend in any environment. That was the case for Nordstrom in Q2. However, their guidance for the year was pulled back. Same-store sales and profitability are not going to be as robust as they originally thought. That's why the stock was down today.
Now, Ron, the holidays are still a ways off. Should we be holding our breath till then? I mean, when are we going to get some relief?
Well, I think numbers actually aren't that bad. We're still seeing positive same-store sales on a lot of these companies. Nordstrom's is a fantastically run company. I think picking it up on this weakness could be a good choice for investors.
Now, Charly, do you see any opportunities here to pick up some beaten down stocks, or is this just stay away until something else happens?
I do like both Nordstrom and Kohl's, as Ron mentioned. These are exceptionally well-managed companies. I think you're paying about 15 times earnings for Nordstrom shares right now. That's not bad at all. These companies tend to raise their dividends and really treat shareholders right.
All right, now it's time to look at some of the day's movers and shakers. Pulte Group is up today, along with other home builders, presumably getting a bump from those promising housing numbers. Now, Ron, when it comes to investing in housing, is home builders, are they the obvious choice, or do you look somewhere else?
Well, there's a lot of ways you can play it. Home builders are certainly the obvious choice, but you can look at a company like Home Depot or Lowe's or lumber liquidators. Today, we're actually seeing a mixed bag of what's going on with the home builders, because while the 5.9% is solid, it actually was less than expected. So we have half the group down and half the group up. Which is a little bit confusing. What I think we're seeing is the folks that are focused on single-family home building are the ones that are down today, because the economic numbers show that that was the weakest segment. Overall, though, 5.9%, not too shabby.
Applied Materials is up after reporting quarterly numbers despite weak sales and disappointing fourth quarter guidance. They also announced that CEO Mike Splinter is out. Charly, the numbers weren't great, but the stock is up. What happened?
The numbers aren't great, but the outlook going forward into next year is really strong. What Applied Materials does is they sell all the equipment to the companies that make the semiconductor chips that are in your smartphones and your computers. They also are involved with the production of displays. So the outlook for those items looks good in 2014, and that's why Applied Materials is doing so well, even though this quarter was not that great.
Right. Now, Joseph A. Bank literally can't give their suits away. Offers like buy one, get five free aren't working, and the company is projecting some shabby-looking second quarter sales figures. Ron, what is Joseph A. Bank's problem?
You failed to mention that the one costs $2,000 and then the five gets thrown in. That seems to always be my experience when I go into one. These numbers are clearly not good. The company actually hasn't even reported second quarter yet. This is an update that they came out with, and they said the promotional activity just didn't work, which is never good to hear. Sales will be down 11% for the quarter when they report, I think on the 26th of August. They need to do some re-merchandising, rethink their promotional activities. The stock has done very well for a very long time after almost being really left for dead back in the day, but this is a pullback and they need to right the ship.
Yeah, so maybe not buy one, get six free.
No,
maybe not going to fix it. Not enough.
No.
Pandora also reported earnings. This makes for 3 consecutive quarters of accelerated growth. So, Charly, Apple is supposedly hanging out on the fringes, and pretty soon we're going to see an iTunes radio. So how scared should Pandora be? Can they keep their hold on this industry?
I think with Pandora, it's growth in every metric except the one that matters, in my opinion, which is profitability. You know, they've been one of the leaders in the space for a long time. Their subscriber counts are phenomenal, but like you say, there's competition from Apple, there's competition from Spotify and radio. And if Pandora's not making money right now, I wonder if they'll be able to in the future. So I'm actually very skeptical going forward.
All right, that's it for today's Movers and Shakers. Let's look ahead. I want to know one stock on your radar. Ron.
Home Depot is a stock that I'm paying careful attention to. They report next week. As we discussed earlier, it's an interesting way to play home building and the real estate market. I want to see what their going forward statements look like with respect to not only home building, but the economy in general. Very important. It'll help me inform what I think about that stock, but many other stocks as well.
Charlie, what are you looking at?
Sticking with our theme of well-run retailers having a tough time, I'm looking at Target, which reports earnings next Wednesday. Their Q1 was soft, and given what we just heard out of Wal-Mart, their closest competitor, I'm not expecting great things out of Target, but that might be where an opportunity can come from.
All right, thanks a lot, guys. For Ron Gross and Charlie Travers, I'm Alison Southwick. Thanks for watching.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal